Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 29th of June 2018. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves we need to be aware of. And it's an about face that we're looking at this morning. The euro, sterling, the Aussie dollar and the Kiwi all rallying against the US currency. We'll look at some of the reasons why the euro has rallied and led the charge against the greenback. But just regard the prices here for the moment. And let's look at dollar index trading back down to 94.81, down 0.5% overnight. Quite a significant move then there in dollar index and in the majors as well, and shrugging off yesterday's dollar strength completely. Right then, what's on the calendar today? Events that may move the markets. A reasonably busy calendar, though not too much in the way of high impact data to speak of. To come at 6 a.m. GMT, we will have retail sales out of Germany for the month of May. We'll have consumer price index data out of France at 6:45, and then we get some more meat on the bones at 8 a.m. GMT with German unemployment rates for June. 8:30 sees the release of some of the key data for today, which is gross domestic product for the first quarter out of the UK. We'll also have mortgage approvals for the month of May at the same time. Moving on to 9 o'clock, we'll have Eurozone consumer price index for June, and the core consumer price index data, I should say, for June as well. So though not perhaps as important as it once was, inflation will still be of interest to the market. 12:30 sees the release of a raft of core personal consumption and spending data out of the USA. We'll also have a GDP read from Canada for the month of April. And at 13:45 we'll have the influential Chicago Purchasing Managers Index data for June. 14:30 sees the Bank of Canada release its Business Outlook survey. Imagine the market will pour over that given the prospect or not of Canadian interest rate rises in July. 1700, as ever, to round off the trading day, the Baker Hughes US oil rig count. But if you are in the market late tonight at 22:45 GMT, you can see New Zealand building permits data for May. Right, breaking news and comment then that's caught my eye overnight. First of all, the euro has rallied versus the dollar as EU leaders reach a deal on migration at the two-day Brussels summit. I'm not sure that migration itself is that much of a financial issue, but I think it's the sentiment around the subject and the fact that disparate views have come together to agree a deal that's led to the euro rally. Meanwhile, Japanese unemployment has hit a fresh 25-year low. That might sound like good news until you realise that the number of unfilled vacancies in the country versus potential applicants also rose to new record highs. Net, there are thousands of unfilled jobs in Japan and nobody to take them up. Meanwhile, Mexicans prepare to vote in general and presidential elections on Sunday, with the left-wing AMLO, a controversial but charismatic candidate, heading the polls in the leadership race. Food for thought then, something to take away with you into the trading day and beyond, and why not think about this? US interest rate futures are pricing in just 75 basis points, or effectively 3 Fed rate rises over the next 3 years, an economist at the IIF highlights. But why should that be? Well, could it be that money markets are telling us that they think a recession is on the way? And the reason I say that is because obviously in a recession you would expect the central bank to be cutting rates rather than raising them, and therefore money markets may be telling us that one is imminent within 3 years. If that's the case, what now for the dollar? And could the dollar weakness that we saw overnight be a sign that perhaps the market isn't as confident in the strength of the dollar as we once thought? Here's the chart of US yield curves currently, and I've highlighted the area around 3 years, and you can see that at best we're looking at interest rates just over 2.5% at that point in time. Right, please take a moment to read the risk warning. Trading CFDs and or foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. Thank you for your time.